What if the single biggest mistake LLC owners make is hiding inside their own paycheck? Welcome to Winds of Thought. If you're running an LLC, you've built a shield for your assets. But without the right strategy for moving money, that shield can shatter, leaving you exposed and costing you thousands. Today, we're dismantling that risk with a clear, step-by-step guide for paying yourself correctly and safely. Let's begin. The primary method you'll use is called an owner's draw. Think of it as your official channel for transferring profits from your company's account into your personal wallet. This isn't a salary with a fixed amount and schedule. It's a flexible distribution of the earnings your business generates. The golden rule, the one you cannot afford to break, is to keep your business money and your personal money completely separate. Blur this line and you risk piercing the very legal protection your LLC was created to provide. So, how do you build this system correctly? Let's walk through the 3 essential steps. Step 1. Secure your employer identification number, or EIN. This 9-digit code from the IRS is your business's social security number. It's how the tax authorities identify your entity. The application is straightforward on the IRS website, requiring basic details about your company's structure and purpose. Once you have this number, you hold the key to the next critical stage. Step 2. Establish a dedicated business banking account. This is non-negotiable. You must have a separate account where all company income flows and all company expenses are paid. Use your new EIN to open this account. Every dollar your business makes should live here, untouched, until you formally decide to pay yourself. Step 3. Execute your owner's draw. When your LLC has sufficient profit, you can move funds from the business account to your personal one. Do this via a traceable method. An electronic transfer or a written check is ideal. Why is this paperwork so vital? It creates an undeniable audit trail for the IRS. Meticulously log every transaction, the date, the amount, and the purpose. This record keeping isn't just busy work. It's your first line of defense. Your business bank account is a fortress, not a wallet. Let's make this concrete with an example. Imagine your venture earns $8,000 in a month. You decide to take a $3,000 owner's draw for personal use. You would write a check to yourself from the LLC's account for that amount, deposit it into your personal bank, and immediately record this movement in your official business ledger. The money is now yours. The process is simple, but the discipline is everything. But what happens when you get this right, but forget the silent partner waiting for their cut? That partner is the tax authority. Here is the most common pitfall for new entrepreneurs: forgetting about self-employment tax. As the owner, you're responsible for a combined 15.3% tax that covers Social Security and Medicare. This is on top of your standard income tax. The critical thing to remember is that tax applies to your net business earnings, whether you leave the money in the business account or transfer it out. The IRS sees that income the moment your business earns it. To avoid a brutal surprise, always set aside a portion of your income for taxes. A safe practice is to reserve 25 to 35% of your net profit in a separate savings account. If your LLC nets $100,000 after expenses, you should be setting aside $25,000 to $35,000 for your tax obligations. This buffer protects you from scrambling when tax season arrives. Profit is an opinion, but tax liability is a fact. Your LLC is a pass-through entity for a reason. The profits pass through the business and are taxed on your personal return. This avoids the double taxation nightmare of C Corps, but demands vigilance from you. The brilliant upside: you can leverage business deductions to lower your taxable income. Legitimate expenses for software, marketing, a home office, or equipment directly reduce your profit number and thus your tax bill. This structure, combining limited liability protection with pass-through taxation, is why the LLC is so powerful. It safeguards your personal assets, your home, your car, from business creditors. It allows you to take smart risks, but as your profits grow, the weight of that 15.3% self-employment tax becomes heavier. There comes a strategic point where considering an S-Corp election makes profound financial sense, allowing you to split your earnings into a reasonable salary and distributions that aren't subject to that tax, potentially saving you a significant amount. That, however, is a conversation for another video. If you found this breakdown valuable, if it clarified the path to paying yourself with confidence, then do the channel a huge favor and hit the like button. It really helps us here at Winds of Thought. What financial puzzle should we solve for you next? Let us know in the comments. Thank you for watching. Until next time, think clearly.